Is a Gold IRA tax-free? That is the question so many of you are asking me right now, because you are scared to death about inflation, you are scared about the stock market, and you want something safe to hold on to as you approach retirement. You see the commercials on television, you see the beautiful, shiny gold coins, and these companies are screaming at you, protect your wealth. It's tax-free. But I need you to stand up straight, take a deep breath, and listen to me very closely, because what you don't know about the tax rules of a Gold IRA can absolutely destroy your financial security. Let's get real. A Gold IRA is not some magical loophole where taxes disappear into thin air. It is a financial account, and it follows the exact same IRS tax rules as any other individual retirement account you have ever owned. If you open a traditional Gold IRA, you are funding it with pre-tax dollars. Yes, your money grows tax-deferred while it sits in that vault. You don't pay taxes on the gains year after year. But the second you turn 73, the IRS is going to knock on your door for your required minimum distribution, your RMD. And when you pull that gold out, or you sell it for cash to take your distribution, every single dime is taxed as ordinary income at your current tax bracket. Now, if you choose a Roth Gold IRA, you are using after-tax dollars to buy that gold up front. In that case, yes, your withdrawals in retirement will be tax-free. But do not let that word tax-free blind you to the traps that are waiting to snapshot on your savings. The first major fear you have to confront is how you actually pay those taxes when you don't have cash in the account. Think about it. You have an account full of physical gold bars and coins. You turn 73, and the IRS says you must take out $10,000 this year. Gold doesn't pay you a dividend. It doesn't pay you interest. It just sits there. So to get that $10,000 out to pay your ordinary income tax, you either have to force the custodian to liquidating and sell your precious gold, potentially when the price of gold is down, or you have to take what is called an in-kind distribution. That means they literally ship the physical gold to your house, and the IRS treats the market value of that gold as taxable income anyway. You still have to find the cash from somewhere else to pay the tax bill on the gold you just received. But the biggest mistake, the one that makes my blood boil because it is ruining retirees, is the home storage trap. You see these predatory companies telling you that you can hold the gold yourself in a home storage IRA. They make it sound so safe. Keep it in your safe, keep it under your mattress, keep it close to you. Let me tell you something right now, no, you cannot. The IRS is incredibly strict about this. Physical gold in an IRA must be held in an IRS-approved, secure depository. The second you take that gold and put it in your personal safe at home, the IRS views that entire move as a total distribution of your account. They will disqualify your entire IRA. You will owe ordinary income taxes on the entire value of that gold immediately, and if you are under age 59 and a half, you will get slapped with a 10% early withdrawal penalty on top of it. And let's talk about the hidden erosion of your money, the fees. A regular IRA at a brokerage firm can cost you absolutely nothing to hold stocks or index funds. But a self-directed Gold IRA requires a specialized custodian and an approved depository. You are going to pay setup fees, annual maintenance fees, and storage fees to keep that metal guarded. These fees are not paid in gold, they are paid in cash. If you don't have cash sitting in that IRA, they are going to liquidate your gold bit by bit just to pay the monthly storage bills. So what is your actionable takeaway? What must you do right now to protect your hard-earned money? If you truly want gold in your portfolio because it gives you peace of mind, do not rush into a high-fee, complex self-directed Gold IRA without doing your homework. First, look at your total retirement portfolio. Gold should never be your entire basket. It is a volatile asset that produces zero income. Most legitimate financial minds agree that if you want gold, it should be no more than 5 to 10% of your total nest egg just as a hedge. Second, if you want the price protection of gold without the tax nightmares, the setup fees, and the storage headaches of physical bars, look into a low-cost gold ETF, an exchange-traded fund, inside your existing, standard traditional or Roth IRA. It trades just like a stock, it tracks the price of gold, it has no hidden storage fees eating away your capital, and it keeps your money liquid so when you have to take an RMD, you can sell a share in 1 second with zero friction. Be strong, be smart, and protect your own wealth by knowing the real rules before you sign on the dotted line.